Hey everyone, good evening, and thanks for joining us on a Saturday evening. As you all are aware, we'll be having the pitch call of impressive D2C spices brand Tulua here. They're backed by some good bunch of folks like Beyond VC, Arjun Vaidya, Hame Angels as well. Without further ado, I'll invite Richie, who is the founder of Tulua, to take over and talk to us more about Tulua.
Hi, everybody. Good evening. My name is Richie, and I'm the founder of Tulua. Thank you so much for taking the time on a Saturday evening to join for our pitch session. So I'll quickly share my screen and take you all through the deck, and after that, we can jump into a Q&A. Can you please enable my screen sharing?
Yeah, 1 second. Yeah, please check now.
Please let me know once my screen is visible.
Yes, it's visible.
All right, awesome. Let's get started. So I launched Tulua in 2020 with a vision to bring the true Indian flavor to the limelight. I believe that being an agri-rich country, our biggest asset are our spices. I feel like it is the backbone of our culture and it is also the face of our nation in a global landscape. At Tulua, we are on a mission to bring single origin and unadulterated spices to every kitchen. Our product range includes ready to cook pastes and spices. Speaking of our team members, the brand was launched by me. I'm the founder. And a little on me is that I have over 10 years of experience in marketing and brand building. Prior to launching Tulua, I had my own creative marketing agency, which was my first startup, which went by the name of Surge Digital. It was based out of Bombay, and we worked with a lot of brands in the F&B and lifestyle space that were in their early stage, like Swami Drinks, Casey Roasters Coffee, Pomori Gin, etc. Apart from me, my father, Hitesh Dave, also works full time at Tulua. He joined in 2021. He heads the sales and distribution for Horeca. A little on him is that he has over 35 years of experience in sales and distribution across two key markets, which is India and China. And prior to joining me in Tulua, he was working with the Sankalp Group and he set up the food service network for them in Bombay. Apart from the two of us, we also have Arjun Vaidya as a hands-on advisor. A little on Arjun is that he is the founder of Dr. Vaidya's, which is now an acquired company. And he has been a part of our journey since almost the very start. He's seen the trajectory and he is hands-on advising us to grow our D2C channel. Moving on to our product line, starting with the spices. So the spice market in India is really large. The total TAM is around $42 billion and is growing at a rate of 15.7%. At Tulua, our spice collection comprises of 50 SKUs featuring whole spices, individual powdered spices, and blended spice powders. What I believe we are doing with spices is that we are disrupting a dormant market. While the spice industry is really large and has legacy brands, there has been no evolution in the space. What other brands do is they look at spices as a commodity, but at Tulua, we look at spices as a specialty product. What really sets us apart is our focus on quality, the fact that we work with traceable and single origin approach. Our packaging is very premium, it's unlike any in the segment. We use resealable bags which are food grade, and it makes life very easy for our customers to store the product. And we're working on tech integration to shed more light into our traceability. So some of the problems that we're solving with our spices is one, that spices is largely an unorganized sector. So there is a lack of organization that results in inconsistency in quality, and overall there is a complete lack of QC in spices. And because of this, the end user often receives products that are of a subpar quality. At Tulua, we focus on branded and well processed spices, and we prioritize a very rigorous quality control. We have product standardization in place for every SKU, and we adhere to very specific processing methods. The other issue is that there is high adulteration. So, adulteration in the spice segment in India is widespread. It is often a practice that is done to increase the yield, increase the profit margin, and also the shelf life. And because spices is a raw ingredient, it is very hard for the end user to pinpoint and say that there is some kind of adulteration that's happening in their product. At Tulua, we tackle this by being very transparent. So our aim is to offer a top quality and unadulterated product at a very competitive price. Our commitment to transparency provides our customer an insight into our sourcing and processing practices, and this guarantees a very trustworthy buying experience. And lastly, another big issue is that there are old and stale spices in the market. This is very prevalent in the horeca space, where the whole spices, for example, would be of the prior year or the year before that's harvest, and this results in inconsistency in quality, and it disrupts the final recipes in a commercial kitchen, and it causes a lot of loss of valuable time and resources. At Tulua, we tackle this by sourcing fresh spices. So we procure our spices from farms and mandis across the country. This ensures that the product that we have is very fresh, and it also ensures that we get a very competitive purchase price. Some of the advantage that we have over the others is that we're a 100% clean label brand. We focus a lot on traceability. We have a single origin approach. We work with farmers and have farm sourced spices. As a brand, we are plastic neutral, and all our blends are made by chefs. Moving on to the next product line, ready to cook paste. This is also the product line that we launched within 2020. So the total addressable market for ready to cook in India is 460 million and is growing at a rate of 16.3%. At Tulua, our ready to cook collection comprises of 5 regional recipes from across the country. What's really special about these products is that they are 100% clean label and don't contain any kind of additives. Some of the problem that we are solving with the ready to cook is one, the lifestyle. So the people who prefer ready to cook or ready to eat product, they have either a lack of time, skill set, or inclination to cook. Um, by using Tulua's ready to cook range, the customer can make a very complex Indian recipe in just 3 easy steps. It saves a lot of time, effort, and is very convenient to use. And the best thing is that the customer doesn't need any additional ingredients like oil, salt, anything at all. The second issue is that there is very high adulteration. So most of the ready to cook products that are available in the market, they're full of additives, and because of the use of additives, the flavors are not authentic. At Tulua, our products are all natural. So our products are 100% clean label. We go a little beyond saying that it's preservative free. We also ensure that we don't add any added colors, flavors, not even the approved ones. No thickening agents, no acidity stabilizers, no emulsifiers. Basically, no ingredient that we would not use in a home kitchen. And because of this, the product tastes very clean and fresh. And lastly, a very big problem for me personally is the recipes that are available in the market. So most of the recipes in the ready to cook category are the run of the mill tomato onion based gravies, and there is a lack of option when it comes to the regional flavors of India. At Tulua, we focus on regional recipes. So all our recipes are from different states of India, which are very authentic. At the moment, we have 5 recipes from 5 states of India. So we have the Delhi butter masala, Goan vindaloo, Malai curry from Bengal, ghee roast from Mangalore, and Malabar curry from Kerala. And because we don't use any additives, they taste just like a home cooked food. Some of the advantage that we have over others in the space is that our products are clean label in nature. We focus on regional recipes. Our products are very versatile to use. Our products are vegan and gluten free, so people with dietary restrictions can also use it. As a brand, we are plastic neutral, and all our pastes are developed by chefs. Some of our modes that we consider is one is that we are a clean label product. This is something that is very important for us, and it is a founding ether. So all our products, they are 100% clean, natural. They don't contain any kind of additives, and that's because we believe that our products are the kind that people consume every single day, multiple times a day, and it is very important for us to ensure that there are absolutely no kind of additives in it. Second is that we work with traceable ingredients. So we use locally sourced ingredients and farm sourced spices, which maintains the traceability and authenticity. Third is that our products are very easy to use in the ready to cook category. One can make a very complex Indian recipe in just 3 to 4 easy steps. Fourth is that we work with chefs. All our recipes are chef made. So all our products, they're made after a very intensive R&D with a chef from that region. This ensures that the flavors are very authentic. Fifth is that we are a very impact focused brand. So at the moment, we are plastic neutral, and we intend to be very mindful of the impact that we create to the climate and the society. And lastly, a very big moat for us is our packaging. Our packaging is very contemporary. It's unlike any in the segment. It's a premium packaging that resonates with the millennial, the Gen Z, and the global audience, which makes up to most of the buying population. Moving on to our business verticals and talking about numbers. So, our business verticals or our revenue channels are divided between enterprise and consumer retail. In the last financial year, enterprise contributed to 94% of the revenue, and that involves in us selling Tulua branded spices to hotels, cafes, restaurants across the city of Bombay. Our consumer retail contributed to 6% revenue in last financial year, and in that we sell directly to the customer through our website and also through Amazon. Talking about the enterprise products, so Tulua has been the only brand to disrupt the B2B spice industry in Bombay. At the moment, we're supplying to over 100 hotels, cafes, restaurants across the city. And we launched this product range only in Jan of last year. So it's been just over a year since we launched this. But we've seen a fairly decent growth in this. In terms of the quality, our products are 100% pure without any adulteration. Our powders are made with the highest grade of spice, and we have a 12-month shelf life. In terms of the range, our range includes 15 single spice powders, 8 blended spice powders, and 22 whole spices. And in terms of the sourcing, we source from farms and mandis across the country. This ensures that we get the best quality at the most competitive price. In terms of the growth that we've seen, we've seen a very decent quarter on quarter growth in the last financial year. Keeping in mind that we launched the product line only in Jan last year. So if you look at the graph, you'll see that there has been a significant growth every month, and this is because Tulua has been the only brand that has managed to disrupt the B2B spice space. We're the first and the only brand that is supplying branded spices in bulk when it comes to whole spices. And what's really special is that we have a 100% customer retention rate. This is because the outlets that we work with, they are chefs. They vouch for Tulua for the quality of product that we provide. And the purchase managers, they vouch for our brand for the consistency and the customer support that we bring to the table. Some of our customers who we supply to regularly are the Soda Bottle Opener Wala, the Olive Group, Maze Kitchen, which is a chain of restaurants, chain of cloud kitchens, Soho House, Courtyard Marriott, Ramada, Snow World, most of the five-star hotels in Bombay, a lot of cafes, restaurants. Our current region of sales is Bombay. In the future, we are planning for this financial year, we are planning to launch Pune, and then later in the year, Goa. Next year, we'll focus on the north and the west, and the year after on the south. Moving on to our consumer retail products. So our range includes 5 ready-to-cook pastes and 8 single origin spices. In terms of the quality, our products are all clean label. They are made with the highest grade of ingredients. We have a 12-month shelf life on our spices and 18 months shelf life on our ready-to-cook range. In terms of the pricing, we've priced our products very competitively. We're very cognizant of the fact that spices is a product that every Indian is consuming multiple times a day, not once or twice, majorly 3 times in a day. So we wanted to ensure that we make a product that is a mass premium product, which is very competitively priced but gives a very premium experience. So our spice range is priced between rupees 40 to 115 for a 100-gram pack, and our ready to cook paste are priced between 150 to 225. In terms of the growth that we've seen on our D2C, so if you look at the graph, there has been a sharp growth in Q3 and then again in Q4. That's because we launched the spices in D2C in August of last year, which is about 8-9 months back, and that has contributed to a massive growth for us. At the moment, we see about 1,500 new orders every month from across the country, tier 1 and tier 2 as well. We see a 27% repeat order rate, and we are not running any retention marketing at the moment. We see an ROI of 1.3 and a general AOV of 320. Our current channel of sales is our website and Amazon, and it's split between 80% orders coming from our website and 20% from Amazon. In terms of future sales channels for this year, we're working to get onboarded with Q-commerce like Blinkit, Zepto, Instamart. We're also working with Amazon Global to launch our products on Amazon USA and Canada, and we are also working to onboard on other marketplaces like Flipkart and Cred. In terms of the future products that we have in the pipeline, so for spices, we're looking to launch 8 new whole spices this year, and we're also working with chefs to create blended spice powders. In the ready to cook range, we're looking to launch 3 classic kebab marinades. With the operational overview that we have, we'll talk a little about the product manufacturing and how we do it. So, with respect to the ready to cook range, when we launched in 2020, we had our own manufacturing setup, a small little commercial kitchen that we set up in Bombay itself, and that was mainly because we were doing a lot of R&D on the product at that time. In 2021, we started contract manufacturing, and at the moment, all our ready to cook products are third party manufactured. This ensures that we have absolutely no capex cost for that. With respect to the spices, we've seen a very good growth in the last year. We have our own in house packing and processing facility. This ensures that we are able to do a very strong quality control, and it also improves our margins. In terms of the product R&D, all our recipes are developed in house, and this we do to ensure that we are able to maintain certain standards. With respect to the fulfillment, all our D2C orders are fulfilled in house, and all our Horeca orders are fulfilled by our distributor. In the last financial year, we achieved more than 2000% growth. Now we'll talk about what our journey has been so far and what the revenues were like. So the first year that we launched, this was bang in the middle of the pandemic. We never meant to be a pandemic brand, but those were the circumstances. So the first year where we did a lot of R&D, mainly we did 8 lakhs in revenue. The second year we started contract manufacturing, and the first thing we did is we got the US FDA certificates for our products, and that year we did 40 lakhs in revenue. A very big chunk of this revenue came from one single export order. We exported 11 pallets to an importer based out of Pittsburgh in USA. The following year, we did 14 lakhs in revenue. This was completely domestic. And last financial year, we did 3 crores in revenue. This was also the year when we launched the spices. We're currently projecting 10.9 crores for this financial year and 31.9 crores for next financial year. Some of our highlights is that we are an EBITDA positive brand. We have over 12 months of shelf life on our products. Our products, all of them are 100% clean label. We have very strong relations with USDA, and we have US FDA approvals on all our products. In fact, we've also exported 11 pallets of product of our ready to cook range to USA. We're working closely with Amazon Global to start D2C in USA and Canada. And apart from that, we are also in talks with Tradewig from Australia to explore how we can look at launching our products in Australia. We're currently raising a round of 4 crores with a pre-money valuation of 17 crores. Our lead investors are Beyond Seed from Singapore, and apart from them, the co-investors are Hame Angels, Growth 91, and also D2C Insider Super Angels Fund. So that's about us, and happy to jump into Q&A now.
Thanks, Richie. Pretty impressive pitch there, and yeah, some of the good D2C brands backing you as well. So cool. We'll begin with taking a few questions from the chat. In the meantime, if anyone wants to unmute and ask, do raise your hand on Zoom, and we'll allow you to unmute as well. So I'll start from the top. So Swaroop is asking, what do we mean by highest grade of spice?
Right. So, Swaroop, when it comes to spices, there are a lot of different grades. I'll give you a couple of examples to say. So, for example, when we look at cumin, there are different grades of cumin seed. There's cumin, which is a bold cumin, which is a very superior kind of cumin, which is the one that we source. But then there are about 4 grades below that. It impacts the size, the plumpness of the crop, and also it has a little tail. So every spice like that, like even for example, elaichi, the green cardamom, that also has different grades. The highest grade being like a 8-9 which is a very big, it's very big and it's very plump, and it's very like the seeds in it are very good, and then it reduces to like a smaller 4.5-6 crop as well, and that differs for all spices. Like that is the thing for all spices, where there are multiple grades, and we use the highest grade of spices, and that's what we mean, that we sort it by the quality and we pick the highest quality.
Got it. Next question is by Krishna. What is your expectation of B2B versus B2C for financial year 25 and 26?
Okay, so for this financial year, I'll answer that first and then for the next financial year. So, this financial year, we've already seen a shift already from the percentage split in the last year. So, at the moment, we are on a 90-10, where 10% is coming from D2C as opposed to the 6% from the last financial year. So, we've already seen that shift. However, with Horeca, it is a very strong engine for us. It is an engine that has been sustaining for a little longer than the B2B. And what we see is that in Horeca, the AOV of a customer is higher than D2C. So while we will grow the D2C, and that is the intention for utilizing the funds after this race, where we grow the consumer side of the business, we still uh, are envisioning that the revenue generated from B2B will be higher. So the split that we are looking at this year is around a 20-80 or a 25-75. And the next year is when we are expecting more of the or more of D2C, like more of the consumer products. That's also the year when we are intending to start with GTMT on ground. So at that point, we are expecting it to be like a 60-40 split.
Makes sense. Next question is by Rajiv. How much premium in pricing with respect to established players? Just checked on Amazon for some project products, it is 3x.
Right. So we've what we've done is we've tried to price the products very close to, or as close as we can, to the legacy players. We observed what are the main type of brands that are available in the market, and we understood that there are regional brands, legacy brands, and the new age brands. We've priced it closer to the legacy brands. So, for example, our Kashmiri chili powder, we retail it for 115 for a 100 gram, but something like an MDH or a Badshah will retail for about 124 to 135 even. So that in that product it is slightly cheaper. But if we look at a product like mustard seeds, for example, then our mustard seeds are 40 rupees, but a legacy brand mustard seeds would be between 32 to 36 rupees. So it differs product to product, but we try to keep it in a very similar range, if anything.
Sure. Next question is by Chetan. Can you please share what Tulua is doing regarding adulteration as a risk, which recently has impacted big companies dealing in spices from India?
Thanks for asking this, Chetan. I feel like this is a very, very relevant question. So, what we do is at the time of, when we are sampling any new product, we do a whole bunch of lab tests. Like, all our products, of course, go through a sensory QC and a visual QC, but it also goes through a lab test, in which we check for any use of pesticides also. So this is what we have done to ensure that our products are all clean and it doesn't have any kind of additives. In fact, we also prefer working with farms that have regenerative farming techniques. So if they're practicing regenerative farming, that means the soil is is using, or rather is being used for multiple different products, and it doesn't crops, and it doesn't need pesticides as much, and they are able to do a more organic kind of farming. So that is our preference. But that being said, that all the products that we have, we do lab tests to ensure if there are any kind of additives, pesticides used in the product.
Yeah, great question, Chetan. Next question is by Krishna again. Spices is a commodity. While there could be some initial spurt, how much can this scale in B2C, especially premium segment? And what made you launch spices?
Okay, so I'll first answer your question about how we launched the spices, and then we'll talk about the growth that we envision. So when we launched with a ready to cook range, and because our ready to cook range is all natural, it relies very strongly on the quality of spices because it's Indian recipes. So the spices is what adds the color, the flavor, the aroma, all of that. And what we noticed is that became our biggest pain point, that the quality of spices that we were getting and we tried the biggest distributors in Bombay, but the quality of spices that we were getting was very inconsistent, where batch on batch, the cumin quality would differ or the chili quality would differ, which would impact our batch, which would impact our bigger batch that is being produced. So across 2001 to sorry, from across 2021 to 2022, we started sourcing spices directly from across the country. It started with one product like cumin, that was a big issue for us, and then the chilies, which were a big issue for us. So ek karke we started sourcing from different parts of the country, and we created this fairly decent network, which was initially just for us, for our ready to cook range. Then around 2022, we realized that the dynamic was shifting again, where COVID restrictions were now back to normal. There were no more COVID restrictions. People were adapting back to their normal ways of life, and the surge that we had seen during COVID of people sitting at home cooking, trying a lot of like different food products, items, etc., that had drastically gone back because people were back in their offices and they were no longer finding a lot of enthusiasm in cooking anymore. So we started seeing a dip in the ready to cook, and we realized that while this is a very, very strong product, it is still an occasion buy in India. In India, people, the moment they had their cooks back in their kitchens, they preferred that. So then we looked at the value add that we had created for ourselves, and we saw that spices was a very, very large value add. And what we really wanted to do is get into as many kitchens as possible. And we realized that the quality of spices that we had was far superior than the quality of spices that we were sourcing initially. So in 2023, start of 2023, we decided to launch with the spice range. Initially, we launched this as a Horeca first product to solve the same problem that we did for ourselves for other hotels, cafes, restaurants, etc. And we saw a very good response on that. And a couple of months down the line, when we were very, very certain of the quality of the product, we'd done a lot of surveys with the chefs who we work with. Then we launched it in D2C. In terms of spices as a commodity, I agree. Like, spices are looked at as a commodity, but we look at it very differently. Thanks to, all the time we spent on sourcing, we started looking at spices as a specialty product. Like, to give you context, it is not all haldi is the same haldi. Like, there is haldi that is grown across the country. There's haldi grown in Maharashtra, in Tamil Nadu, and also in Northeast, but the quality completely differs. And as a layman, like as customers, we don't know that difference because none of the brands are focusing on that. And that's something we want to do, and that's how we are setting ourselves different. Like, we are looking at spices as a specialty product, a very similar trend to what we all saw in tea and coffee. So I feel like there is a lot of space in the market for this to scale. I don't think it's just an initial growth spurt, because we didn't have a lot of marketing or anything like that to go ahead, like to achieve that growth spurt. So I really believe that the market is really large. The customer today is a lot more aware. They are a lot more enthusiastic to use products that are of a better quality. And just the TAM is so large in spices, because literally every single Indian is somebody who's a potential customer. So I do believe that it can scale really exponentially in B2B. And we don't position ourselves as a premium product. It is a mass premium product. Like, it's not extremely expensive like a Two Brothers, for example. Like, it's not unaffordable, or it's not like a luxury product. It is a very affordable product, and people in various price brackets can also use it.
Sure. Uh, yeah, I think Krishna's question was done. Next question is by Namay. If B2B is doing well, why not focus on that across the country? Why venture into B2C?
I'm glad you asked this, Namay. So, with this, what I feel is that sure, like B2B is good, and it is always going to be a very well rounded engine when it comes to generating revenue. But I feel like a true value is added when there is a strong consumer facing product. In fact, this is something that we saw impact our B2B as soon as we launched our D2C. So the moment we launched our D2C, we started running a little bit of ads. We did a couple of influencer gifting to chefs across Bombay that immediately impacted how our customers, our ongoing customers for B2B were perceiving our brands. It opened up a lot more doors in D2C in Horeca as well. So I feel like it's interconnected. If we don't build out our customer facing product line, then our brand growth will be stunted. So while B2B is a channel that it sustains itself and is very good for generating revenue, the real value is generated when we are also able to build a consumer facing brand.
Yeah, agree there. Yeah, folks, I've also shared the link to the deal page on Invest. So the deal is already live for our syndicate with a minimum bias fund being 2 lakh, and a very interesting proposition to be on the direct cap table of Tulua at 5 lakhs, since it's still an early stage in their growth story. So yeah, depending on your confidence, and we'll also be sharing the recording and more documents post the call as well with you all. Rajesh is asking for RTC products. How do you preserve their quality or shelf life without preservatives?
So, Rajesh, when it takes us a while to develop any product in ready to cook, because we look at it as a more of a food science. So we have a two pronged approach while developing any product in ready to cook. One is that we have gone back and sort of seen how for back in the day, how are Indians preserving food. Like we have achars, and achars are something that across India for many generations, we have been preserving achars which have things like or carrots in it, which is something, and it doesn't go bad. So we first went back and we studied how Indians have been preserving food, and then we realized that there are a lot of these ingredients which are used, which naturally reduces the pH. So we work on food science. We ensure that all of our ready to cook pastes are below a certain pH, and we use natural ingredients which are already in our food, like for example tamarind, apple cider vinegar, oils, like good quality oil. So we use those kind of products that ensure the pH is low. That's one prong. And the second prong is that once the product is made and it is packed, it is packed in a retort pouch, which is a 7-layer pouch, and then it goes through a retort process. So in that retort process, what it ensures is that if there are any microbials in that pouch, it kills it, and there are no new microbials that can enter. So everything within that pouch becomes a safe space.
Sure. Next, Swaroop is asked a couple of questions following up on the earlier spice grade one. Are the other known brands like Everest and Catch not focused on spice grade? And if not, how is it giving Tulua an advantage over them? Is there an untapped market that only Tulua is able to cater to? I think we'll take this one, then we'll go to the next.
Sure. So, honestly, Swaroop, I won't be able to comment on their sourcing practices. Neither am I going to be able to comment on the grade. But with all the news that we are now seeing, I think it is pretty evident that there is not a very strong for a lack of better word, QC that is being maintained to ensure that the spices don't have any kind of additives. At Tulua, we do go an extra step to also identify not just that that the spice is a very clean spice or an organic quality spice, but we also try to find out that where in the country is the best quality of that spice grown, and that I don't think any other brand is looking at. That is only Tulua is focusing on the traceability of the spice, of where it is grown. None of the big players are actually focusing on that, and that to me is an untapped market, because that's what I said, that they look at it as a commodity, we look at it as a specialty product, and that is something that really sets us apart, especially now with the consumer behavior rapidly changing, the core customer going is now like more of the millennials and the Gen Zs. They are the ones who are very very careful of what food products they buy. So that gives us a leverage over the other brands that are in the market.
Sure. His next question is supply of high grade spices enough to meet the demand, and to what extent? At what levels do you see the revenues hitting a wall because of supply limitations?
Right. So there is no supply limitation per se. This is something that we do as an activity before we onboard any of our partners. So these are all also partners that generally do large amounts of export. It's just that within the India market, those products are not used as much. So supply is not a problem. Even in the situations or even in the cases where we work directly with the farmer, which is generally the second or the third gen farmer, they not only have enough stock in their farm, but they also have a lot of neighboring farms. That's how regionally it works in India, where you have your own farm, but there is also family farm of chacha, etc., who they can buy the product from. So supply is not really a problem in a lot of spices. The spices are grown in intervals, so it's not that there's just one harvest that will happen in the year. There are multiple harvests that happen. So we are not very concerned uh, of limitations on sourcing at the moment.
Sure. Next question is by Arun. You said you're supplying to Marriott and other hotels only in Mumbai. My understanding is hotel chains will source for qualified vendors who can supply for non-perishable products to all their hotels located across the country. Why are you supplying only to hotels located only in Mumbai?
Uh, right, Arun, this is a very, very big misconception. Actually, every single five-star has their own procurement team. So, if it is a Courtyard Marriott or if it is the Marriott Group, each and every outlet, even in the same city, has their own sourcing department, and they source it from their respective vendors. Yes, they do have a very, very strong onboarding process, like a very stringent onboarding process as well. And in our case, we have been able to crack that because the quality of our products was very good. In fact, that's why I said that we've been the only brand to disrupt the B2B spice space, because in our first year of operations we were able to crack multiple five stars, not just one. So it was the fact that our quality was really high. And in terms of qualified vendors, we have all the documentation, like right from the FSI certificate up until FDA for our product. So anything that they require for KYC, we are able to provide. And to answer your question about why are we supplying only in Bombay, so we didn't want to start with a lot of different locations in the first year itself. We wanted to focus on just the Bombay market. That is a fairly large market too. After this raise, we are going to launch another market, which is Pune.
Got it. Krishna's question is, does it require 25 lakh over 5 years? So this is for me, I think. So Krishna, yeah, this is via Invest platform. So it's a SEBI regulated AIF fund. So it's a SEBI guideline right now, like we've discussed in the past. It's not a mandate, but it is recommended to sign up for a AIF if you are confident of at least being close to the mark, if not reaching that mark. And yeah, right now it's a guideline, not a rule. And you also have the option of 5 lakh via direct cap table, which is nothing to do with signing a contribution agreement on Invest platform. It will be directly wiring to Tulua's account. Cool. Next question is by Deepak. Why did you name the brand Tulua? Interesting question.
Yeah. So, Deepak, the word Tulua means to rise in Sanskrit. I gravitate towards words that mean to grow and to rise. When I was looking for a brand name, because of all my experience in marketing, I was looking for a name that doesn't mean a lot of things to other people. Like, for example, it's not a mother's recipe or a maa ka swad, or those kind of words that make you imagine something else. I wanted it to be a blank canvas in most people's head, where if they hear the word Tulua, they don't resonate anything else with it, which gives us a lot of space to build the brand story. And another thing is that I wanted a word that people from across the globe can say easily, that rolls off the tongue in an interesting way. It looks very good also on a box. So Tulua was something that met all the criterias, and above and beyond, we also had all the trademarks available for the name, which is fairly difficult in today's age. So yeah, that is the reason I picked Tulua.
Interesting name and interesting story. Cool. Next question is by Ayush. Which specific oils you are using in your RTC products? Right.
Yeah, so depends on product to product. We use mustard oil in some, we use coconut oil in some, we don't use palm oil. So, it depends. Like, it's all single oils that are being used. In some, we used high quality of ghee. So it depends on product to product on what the recipe demands for.
Got it. Next question is a bunch of questions by Anita. We'll go one by one. First is, are all the spices sourced locally?
Yes, all the spices are sourced from across the country.
Next is, what technology is used to increase the shelf life?
In spices, we don't need to use any special technology to increase the shelf life. We ensure that we use a very high grade food quality, a high quality food grade pouch, which is resealable. And for ready to cook, we use retort.
And the last question by her is, what are the products ready to cook?
The ready to cook products are essentially cooking pastes. So these are inspired by regional Indian recipes. Like, for example, we have a butter masala paste using which customers can make a lot of dishes, right from dal makhni to a butter paneer or chicken as they like. But they can also do other things like use it as a base for pizza, make sandwiches out of it. Lots of different things can be done because the product is very versatile. But it's not a dry form; it's a paste form.
Sure. Next question is by Rajiv. What is the current shareholding pattern and how much do the founders own?
So we have raised last year. We've done a small fundraise of close to 2 crores. At the moment, with us is 82%, and the rest is with the angel investors who came in the first round.
Uh, Chetan is asking, does Tulua procure directly from farmers or mandis where quality consistency is not uniform? Can farmers approach Tulua to supply directly from farms?
So Chetan, it differs product to product. In most cases, we have an agent in between. This provides cushioning to us as well as the farmer, because if there's a agent in between, and also the agent is from the same region, so it's not somebody from here, for example. It ensures that we have more lenient payment terms, and it also ensures that the QC is done better. That being said, can farmers approach us directly? Yes, they can, but we have a pretty long process to convert any farmer, because we ask for samples, we ask for a lot of COA, and we also do all the lab tests, and only after that we approve any specific farmer or farm.
Sure. Next, I think we covered Chetan's question, right? Yeah. Rajesh, what about scalability? Are you planning any new products or product categories?
Yes, so we are planning to launch new products this year. So we are launching 8 new whole spices, and apart from that, we are also working with some chefs to create blended spice powders.
Next question is by Krishna. What is the moat? Is there anything that cannot be replicated by others?
So Krishna, our moat, like I said earlier, there are a couple of things. One is the fact that our products are very traceable in nature, and that is a very, very big differentiator for us. It is very hard for a lot of for anybody else to actually understand where each of the spice is coming from. It's a very long process. It's something that took us almost 2 years before we launched it in the category. We are also working on tech integration to bring this out to the customer, where the customer can scan a QR code on the box and on the website and get a deeper understanding of where each product was sourced from. So for example, if there is a lakadong if there's a turmeric powder, it shows what region of India it was sourced from, which is lakadong in Meghalaya. What is the quality of the soil? How does the quality of soil impact the crop and the nutrients in it? What are the special compounds in it? For example, a curcumin in case of turmeric, and also how climate has impacted the soil in the last 10 years. So those are a lot of traceability information that we are working on to integrate through a QR code for the customers. Again, something that others are not looking at. So that also is our moat. And lastly, a very big moat for us is the packaging and the look and feel of the product, which goes hand in hand with the quality of the product as well.
Got it. I think we have a couple of questions from Paritosh. At what valuation Tulua is raising? I think it's 17 crores pre-money. His follow-up is where funding will be utilized.
So, Paritosh, in the last year, we have cracked the B2B side very well, and now we are cash positive, and that we are EBITDA positive, and we're not burning too much. Right now, the intention to raise funds is to, one, launch new products in D2C. Like I said sometime back, we're launching about 8 new whole spices and also working with chefs to create a blended spice powder. So, new product launches where we'll utilize it. Also, we want to do a lot more marketing for our consumer retail products, build a stronger brand recall and perception. So that's where the funding will be used as well. And thirdly, right now we are a very small, slim team. As we grow, we're very cognizant of the fact that we need to build a mid and senior level team as well. So the funds will also be used for getting the right talent on the team.
Makes sense. A couple of questions from Ayush. What's the current team size and how many farmers are you directly associated with currently?
Current team size is 12 people, split between office, sales, processing facility, etc. We also have, apart from that, agencies who we work with for performance marketing, design, etc. In terms of how many farmers are we directly associated with, we have a network of about 25 farmers right now, but we also strongly prefer to work with agents just to provide cushioning for the brand and the farmers.
So Rajiv's follow-on question after earlier equity split is, after this round, then will founders own around 53%, or are some initial investors offering part of their shares, etc.?
No, so we will have more than 60%. In this round, the dilution will be around 17% roughly. So we will still hold over 60%.
Swaroop is saying, can we access the pitch deck? So Swaroop, we right now just sent a write-up and a brief one pager before the call. So post 30 minutes after the call, you'll be getting both the pitch deck, the recording, and I think I've already shared the invest platform link here in the chat couple of times. So you can also access the pitch deck right away there, but I'll also be sharing it immediately after the call. Sharing the link here again. Pitch deck is downloadable from there as well. In fact, let me attach it here for folks who want to download it right away. I will also attach it here. Cool. Meanwhile, Mayank is saying, how much is the market size of this industry?
So Mayank, the total addressable market for spices is exponential. Just in India, it is $42 billion. And it is also growing at a rate of about 16%.
Got it. Next question is by Pradeep. What is your primary customer segment for the B2C segment?
So for the B2C, our primary customer is tier one, tier two India customers that are in the age group of about 28 up until 42. Customers who are a lot more tech savvy, have a good sense of what the new brands are a little well traveled. Those kind of customers, that's our primary audience. But we're also noticing a lot of orders of late from tier 3. So I think as we grow our marketing and as we are able to grow our product line also, there will be a spillover to a more secondary and tertiary audience. But primarily it is 28 to 45-year-olds in tier 1 and tier 2.
He's commenting that Tulu is also a language spoken in
I
Bangalore.
know, I'm very well aware. One of my best friends was actually Tulua, so yeah, I'm aware it's a beautiful language.
Cool. I think we've taken all the questions in the chat. So if anyone wants to unmute, you can raise your hand, or I'll also allow everyone to unmute. So you can, yeah, anyone is allowed to unmute themselves now. So yeah, you can just click on the mic icon and also unmute. Next question is by Anita. What is the net profit margin?
So our gross profit I'll tell the gross first. So gross for Horeca is about 30%, and gross for D2C is 87%. In Horeca, there are no additional costs because we don't do any kind of marketing, etc. So the net that we see in Horeca is about 15 to 20. It differs month on month depending on how much stock we've purchased essentially. In D2C, or rather in the consumer retail, at the moment our CAC is very high, so we are burning a little in that.
Or maybe I'll shoot one question. Do you see yourself going on next season of Shark Tank now that you've done this is your second round of raise? Do you think that's known for D2C brands getting into spotlight? So
Yes, absolutely. In fact, I did engage with the analysts from Shark Tank at the D2C event, and yeah, hopefully we should be on Shark Tank this year.
great, because just in the season that concluded, one of the solo woman founder backed companies in our portfolio, which some of the folks here on the call invested, Dill Foods, raised on the previous season, and it was immensely popular. I think they got an all sharp deal, and
Yes,
looking forward to having something similar for you, like given the good early growth. So yeah,
yes. Hopefully it will happen this year. We are all rooting for it.
sure. I think we have a couple more questions in the chat. Deepak, where do you see the brand 3 years down?
So 3 years down the line, Deepak, we see this brand to be a chef's choice across all major cities, where Tulua becomes the go-to brand when it comes to spices, and also that means that all the chefs who we work with, they become our flag bearers, and the ones who speak about our brand openly. So that's one. And second, in terms of the consumer retail, we will be pushing a lot in the next 2 3 years, and our idea is to get into as many kitchens as possible. Next year onwards, we are also going to focus a lot more on the export partnerships that we are exploring this year. So in the next 3 years, we intend to be in as many kitchens as possible.
Or next question is by Ayush. How are you partnered with these five-star hotels? Is that annual partnership or quarterly basis?
Depends from 5 star to 5 star. In most cases, it's a tender that we apply for and they give us. But apart from that, there are a lot of 5 stars that don't necessarily need the tendering. Our track record has been of 100% retention. So once somebody starts working for us, they see a very big difference in the quality, and then they don't go back to any other vendor. So while there are some that we sign for a year, and the others who we don't sign with also continue with us, like at the moment, a lot of our customers have been with us for more than 12 months.
That's great. Swaroop is saying, what do your unit economics look like, various cost centers and margins?
So right now, it's pretty lean. We don't have any big cost per se. So our margins look fairly decent in the sense that just in terms of the unit economics, I'll share the gross margin. So we have a 30% gross margin on Horeca products. We have a 87% gross margin on D2C. Overall, at the moment, we are a 6% EBITDA positive brand. A lot of it is also because we burn on marketing at the moment, but there are, in terms of the cost factors that we have, nothing too major. Like we don't we have a pretty slim team at the moment.
Next question is by Sanjay. Price of products. Where does your product pricing be placed compared to competitors? I think we
So
covered
Sanjay,
it.
yeah.
Yeah.
we covered this, but I'll give a quick recap. So we've priced it competitively in context to something like it's in the similar bracket to a legacy brand like an Everest or MDH, going a little ahead or behind in the spectrum. So, for example, our Kashmiri chili powder is 115, but for Everest MDH, it would be 120, 124, etc. In terms of our mustard seeds, that's slightly more expensive than the others. So, but it's in a very similar bracket. So, I would say that's how we've priced it. It's a lot cheaper than any organic brand, but at par almost with a legacy brand.
Krishna is saying, how often do hotels buy and what's the average order value?
Hotels place an order. It depends on restaurant or an outlet to outlet, depending on how big the store is. So, yeah, some of them order weekly basis, some of them order every 2 weeks, some of them order every month, depending on how big it is. Generally, AOV is 40,000 per outlet.
Rajiv is asking, what percent is ARR or recurring sell around in B2B segment?
So recurring sale is 100% because we have 100% retention with our B2B customers.
Hope that clarifies, Rajiv. Ayush is saying, how many co-founders are there and their profile?
Sure, Ayush, the brand was launched by me, founded by me in 2020. In 2021, my father came on board full time. His experience is, he has a very, very rich experience in Horeca sales and distribution. Apart from the two of us, we have Arjun Vedya as an active advisor who's helping us with the D2C.
Cool. Anyone wants to ask any final questions? You can ask in the chat or unmute directly and ask.
Hi, Rohan. Chetan this side. Just one last question from my side.
Sure.
Wanted to understand the organogram of the structure, yeah? So I think I got the little information in the last question about the families involved here. So who other than that are also on the board or in the organization? Yeah?
There's nobody on our board apart from me and my father.
What are your future plans? Do you plan to continue as is, or you're planning to also thinking to have kind of, I think I say devil's advocate, as someone who's really advising or guiding, yeah?
Guiding on what?
So generally for expansions, yeah, I think right now it's been looked by, so you're involved, your father is involved, and also you have one more person you named. So apart from this, do you have any other advisors in the company, yeah, who's really thinking on the strategy side?
No, we don't have an advisor on the company, but after this raise, we are looking to hire more talent or more people in the company. But we are not looking, or we don't have anybody on the board as an advisor for hiring or hiring strategy.
Okay. Thank you.
So yeah, clarifying, Ayush was asking, is Arjun an advisor or a co-founder? He's an advisor. Cool. I think we've taken all the questions, and I think thanks Richie for taking the time out to pitch to us and patiently answering all the questions. Really appreciate that. And yeah, we all are looking forward to be a part of Tulua's great story. And thanks, folks, for taking the time out on a Saturday evening. India's cricket match is starting in an hour, so we have just kept it before that and had a great pitch. We have another quick question from Arun. Exit timelines.
So Arun, right now we are still in a fairly early stage, but what we envision is that all the early investors that we have, we will give them exit within the next 5 years. And there are two ways that we look at this. One is that next round onwards, we are going to we're going to do more VC led rounds. So at that point, we will potentially give some exits to our early stage investors or within the next 5 years.
Yeah. So typically, early stage startup like we covered earlier as well, 4 to 5 years is the average window. We want the startup to grow rather than, focus on only giving exits. And that's when we also get a greater return as well. So yeah, 4 to 5 years is the likely time frame. Cool. With that, thanks a lot, Richie, for the pitch and for taking your time out. And thanks, folks, for joining. Have a great weekend, everyone, and we'll be sharing the recording with all of you shortly.
Thank you so much, everybody. Have a great weekend.
Thank you. Thank you.
Thank you.